Hi guys and welcome to another episode of the Crypto Osho. Today, the Osho discusses the short-term Bitcoin price action. Hopefully we can catch a trade on leverage and make a little bit of money. Now, we all know, especially the traders, what the Bitcoin price has been doing. It has gone 20x in 1 year. From March to March, from March to March, a 20x in 1 year. Now this is insane gains. And what hurts me most is that people that capitulated on Bitcoin right here are still calling for another top. And what is driving this call? It is the famous YouTuber out there which believes that we are in a similar cycle than in 2013. Now, does the Osho see that happening? No, he does not. We might go up and retest this area right here at the 48,500 approximately. We have not seen a retest of those levels yet. And don't be fooled. If the Bitcoin price go up there, I expect to see a massive rejection. So it's probably gonna be a quick. If there's a solid candle arriving right here, I would expect to see a wick. I don't know if I would see a little bit of a consolidation on the daily, but I think it's gonna be a peak sort on the daily. On the smaller time frames, it is arguable, but let's discuss it right now. Let's go to 15 minutes because the Osho sees an opportunity to open a leverage trade, hopefully on a 20x leverage. We're gonna take a look at the other altcoins and potential trades on them. We're gonna take a look and choose from the coin market cap. Please make sure to like this video as well. Leave a comment if there's something you would like me to review. If it's a chart or a farming platform, whatever you want, guys. I am still new to the game. I am open. I wanna target my content to what you guys need. So if you interact with me and tell me what you want, I will give it to you on another video, on the next video, and maybe we will create a Telegram channel and hopefully you guys will join this channel. We can discuss those ideas right there. You know, I will make you some gains. If you can make me some gains, I'll be even happier. So I'll set up a Telegram channel, of course. But for now, this channel is relatively new. We are 2 or 3 days old and there's a lot of pretty interesting stuff happening in the crypto field. For now, please make sure to like this video and let's take a look at the Bitcoin price. Now, I will elaborate each pattern alone. Don't get fooled and lost when you see all of those lines. This is the 15-minute chart. We have been in a consolidation ever since we went down from those levels at $60,000. Now, the first consolidation was a triangle-like pattern. We have seen a breakdown right here and we hopped up in the pattern, consolidating again, which can be considered a fake out. But then we broke out again to the downside and bounced, creating a lower low. A higher low. So this is a higher low. What does that mean? We can draw a new pattern, which is a rising wedge. And as soon as I saw this rising wedge, I knew that this move to the upside would not last. I identified the rising wedge right over here. Now, this chart, I just redrew it. It was not like that, but I've been following it. And so when we got down to this resistance down again, we couldn't. If you take a look right here, the moment we break down is the intersection between this resistance and this resistance. Yes, the Osho gave you an X and Y point on which the breakout happened, which is 100% tradable. And so we consolidated, we couldn't get above of this resistance again, and then we went down, which is pretty interesting. And so here we saw a second wave of FUD and fear on Twitter every big influencer spreading fear. We can just see the fear and greed index, which is a pretty good indicator. And so we bounced, creating this huge inverse head and shoulder, and so went up again. This is very bullish. When we go down this deep and then see a V-shaped recovery, this is usually an indicator of a bullish momentum for the Bitcoin price on the 15 minutes. Now guys, I like the 15-minute chart pretty much, but I do not base my trades only and solely on the 15-minute chart. But it is my preferred time to enter high leverage trades. And when I'm talking high leverage, I mean like a 20x trade. That's it. We saw a quick, now after we broke down here, we went back up, creating a lower high, creating this pattern, which turned out to be a triangle. Now we saw a quick break to the upside, which turned out to be as well, just like right here, a fake out. Went back down, consolidating the pattern again, and saw a breakout down again. Now, this is a pretty important part where we at right now, because we have seen a top-like pattern. Why? Because we have rounded top, it is rounded, and it seems that we have lost momentum. We might consolidate here for a while and then break down, but this is usually bad. Now, why do I use all those indicators? Now I'm just talking about the patterns. I'm going to talk about the indicators I use in a bit, but this is usually bad. And if this goes to the downside, we would have created a lower high from here, creating a big M pattern to which we'll go down back again. And this will be the bearish breakdown of this triangle right here, which was kind of disrupted, but it will break down again, because if we delete this line, for example, we are still supported by this horizontal resistance and this ascending trending line. Now this is very important. We can also see a sign of a triple rounded bottom, except right here it is very V-shaped. Here it is kind of rounded, and here it is kind of rounded. Now this is what we call an Eve and Adam W pattern, which have a 64% of breaking to the upside. We can see right here that rounded bottom, and then this quick break. Now this, let's go and show it to you on Google and type Adam, no, this is an Eve and Adam double bottom pattern. It is important to identify between those two patterns, because a double bottom has many types. We will see right here. You can see the Eve has a rounded bottom and the Adam has a V-shaped recovery bottom. And you can see specific characteristics of those patterns. This is a site, this is a page, I think it is only double bottomed. So that we have a Eve and Adam double bottom trading tips with explanation, measured rule, the big W. You guys go and study this and you will be good at trading. There's percentages, there's everything. This website's cool. I will go to home. Oh, chart pattern. And so yeah, you can check out this website, the pattern site. I bet you could find valuable information right here or anywhere else for free on the internet, so you have no excuse to learning those patterns and trading them for some gains. Eve, you can see it is kind of rounded, and then Adam, it is V-shaped like. And this is where the breakout happened. We can see that we saw a rejection. We would probably see a continuation to the upside right here. Now, this is in 2006. We can go and see what happened. Now, we can find statistics as well for each of those patterns to break to the upside or to the downside. But let's continue our business right here. We have kind of a triple bottom, which some traders might call an inverse head and shoulders, but I do not see this as an inverse head and shoulders. I see it as a rising wedge, which will break down to the downside eventually. Now, an inverse head and shoulders for me is kind of like this one right here. This is a good inverse head and shoulder, but we did not meet the price target for this pattern. The measured price move should have happened and take us all the way to 39,800. So market structure is a better way of assessing those markets when there's not enough momentum in the market. Now, most of you saw the parabolic run and traded the parabolic run, bought and sold some tokens during the parabolic run, and things have been happening quickly right there. Head and shoulders were working out perfectly, double bottoms, head and shoulders, triangles, everything, because there was a lot of momentum. Of course, one could always be wrong, and I would be very aware of trading this final pattern right here. We'll go to the bigger time frame in a while, but I would watch this level right here, which is at the 36,200. If we go out and retest it, we might go to the upside, and then this will be our next area to play in, which is a pretty good sign. But I do expect this price to go up a bit, maybe consolidate, and then go down, continuing the consolidation in this triangle, and eventually I will see a short trade happening, because you cannot neglect the fact that this is bearish. Now, no matter what you see right here, if there's not a whale buying right now, the price is not breaking this pattern, because it has been getting rejected over and over again at the same price, which is 36,200. We could even put it right here and create this area as a rectangle. And so this is the area I've been talking about. This is a pretty important area. If we break out, we might see the bullish momentum go up again. And now I'm going to discuss why I use the indicators that I use. There's one is missing. All right. Now I use the 200 moving average, the 20 moving average, and the 50 moving average. As well, the Bollinger Bands, a moving average channel. You can see this channel. This is the moving average channel. The Bollinger Bands are those blue lines right here. And I use RSI and volume candles. Now, why do I use all of those indicators? And you can pretty much trade patterns using those indicators only. I'm going to show you how. As well, I'm going to discuss a pretty indicator that I use to confirm my trade signals. Now, the Bollinger Bands, which is usually those two lines in blue, help me find a breakout. And so you can see that when the Bollinger Bands are tightening and are staying with no volatility involved in the same direction, we expect to see a big move. Now, is that big move to the upside or to the downside? We have no idea, which is why we have all those other indicators to try and find if this move will be to the upside or to the downside. And so the Bollinger Bands could tell us when to enter the trade exactly before the big price action happens. As well, we can notice right here how it was tightening and tightening and tightening. We saw a big move. Now this might not appear like a big move, but this is a 1.3% move on leverage. If we're on a 10x leverage, that's a 13% move. If I have $100, I make $15 or $13, which is pretty good. And if I higher my leverage, I could make double. Now, I use a 200 moving average as a solid support or resistance indicator. Now, the 200 moving average moves slow because it has 200 candles suppressed into one average, and so it moves slow. It has a bigger wavelength, and so a smaller frequency. If we take a look at the 50 moving average, which is the yellow line, we can see that this one follows the price pretty close, and so it can be used as a line indicator, which is right here. You could use line time, yeah, this one, but I prefer following candles and the moving averages. And so let's get back to 15 minutes. I use the 25 moving average, which is the pink colored line, as well, to watch those interaction between the smaller time frames, because I like to trade high leverage, and it is important to me to see if the 25 moving average is above or below the 50 moving average, and how those two are acting in relation to the 200 moving average. And which brings us to this moving average channel, which is like an average of the two, which is like the range I expect us to be in while I'm studying those two small moving average, which is the 25 and the 50 moving average. And so when I'm in the channel right here, inside the channel, I see that this smaller moving average is curving out and going against the 50 moving average, and the 50 moving average has been going up and sloping reducing its slope. I mean, that's when the Bollinger Bands are tightening. That's when we're gonna see a move to the upside. Now this trade, let's assume that I took the trade in the channel, which I usually take the trades at the bottom of the channel. If I took this trade right here, this would have been a 3.3% trade on 10x leverage. That is a 33% trade. Guys, people on Wall Street, people who do this professionally, CPIs, CFAs, I don't care what those guys do, they trade like 5 trades per day to make a 30% on their money. Now this is a small move that we saw on the 15-minute candle, and which took approximately, let's take it from here all the way to here, it took 7 hours. This move took 7 hours, and Bitcoin does this move every single day. We can see one right here, one right here, one right here, one right here. This one is 3%. You could have shorted right after. Of course, one should find its comfort zone, especially in trading, because you're gonna have to follow a tactic. And so it brings us to the volume indicator. This is a pretty important indicator, because without this, you can never see the volatility that we as traders seek. And so the volume is a pretty important indicator. We can see right here how the volume came in, bringing the Bitcoin price higher, and how it topped right here above this candle. I would never take a trade without volume involved. I like to see those, if this is the average volume that has been happening right here, I would like to see a minimum of those type of volume candles before I open a breakout trade. A breakout trade is when I have a pattern, which is this pattern right here, for example, and I see this volume right here. Now I start getting excited. And if you could catch this candle building up as it is happening live, it is even better. And when you're trading a breakout, you must be aware of everything that's happening, and um, hopefully get in a trade quick using market order, because you don't have time to put limit orders. Now, this candle right here, if we had been right here, we could have seen this candle building up, and we could have took the trade as we break out this top or this horizontal line. So we could have taken the trade right here and closed it somewhere right here. And so it is important, or maybe keep it open, because it seems like we are going to a retest maybe of the higher resistance in this blue box. It is possible. Or even maybe midway right here, still creating a double top, and we're heading back down again. Now, we have seen markets pumping in the past Sundays. For the past 2, 3, 4 Sundays, we have seen the price of Bitcoin pumping and dumping right in the beginning of the week when the markets open. I would be careful trading with leverage, especially these days. And so, which brings us to the last indicator. My last indicator is the RSI, which I like to use, hopefully, to spot divergences. Divergences are a pretty important aspect of charts that you need to understand, and which could help you enter a trade before you see the results happening, which is pretty much the best you could do if you could take a trade predicting where it could go, because you would have an amazing entry position. And so on the RSI, I like to look for divergences. Unfortunately, here we saw the Bitcoin price going, let's paint. We saw the Bitcoin price doing a rounded bottom. Hopefully, I think it was a cup and handle pattern right here, which we're seeing playing out. But on the RSI, we can see that from here to here, we have been setting higher lows, higher lows, higher lows, which told us that the momentum of this chart is going to the upside. And if so, if we manage to enter a trade just here, or maybe right here, it would have been a pretty good trade. 7%, 70% on a 10x leverage, which is amazing. $70 on $100. Now, those are the indicators that I use. I've told you what I think will happen in this chart. I think that we will play a bit in this blue box, and I think that we will see a continuation of a consolidation in this pattern, and sometime in early next week, Monday or Tuesday, I think we're going to see a breakdown from this pattern. I also use this indicator, which is, you can find it on TradingView. It is free. You can add it. People, it is inspired by one of the most successful indicators in the game, which is the market cipher A and B by CryptoFace. And so this is a replica. You can find it for free. The other one, you should contact CryptoFace and let him allow you to access the indicator on TradingView. Now, this indicator is important. Maybe I could do another episode explaining everything about the indicator, but you could go to CryptoFace. You could go to CryptoFace and watch his videos about what everything means in this indicator. And right here, we can see that I'm on the 1 hour chart. On the 1 hour chart, we have seen a top, which means that on the 1 hour chart, we're probably going to the downside, maybe retesting the lower resistance of this ribbon. If it does not hold, we will see a breakdown to the downside, maybe retesting this old resistance at 30,000, which is exactly what we've been discussing here. This is the price target of this move if we break to the downside. let's say we break out right here, which is how I'm supposed to put it, it would bring us, yes, to the 29,000. This bottom right here is at 28,600. If we're bullish, we will see a bottom creating a higher bottom than what we saw right here, if we're bullish. Now we saw like a W right here, we might see a W with higher lows. And that's if we're bullish in the short term. If not, I see Bitcoin breaking to the downside. But I don't see Bitcoin breaking down below 30,000 in the near future, because as I said, we might break down, do a quick wick or a retest like what we did right here. But I do believe that we have to consolidate a bit more in this area that we're in before we see a big move to the upside or to the downside. It is more likely to see a big move to the upside for a retest of the 41,000 from here. But this is crypto and everything could happen, guys. Stay aware. We could see a beautiful W pattern happening right here. If we use symmetry to identify when will this happen, let's say that this is the midpoint right here. This took 27 days and 8 hours. 27 days and 8 hours. Let's go right here, 27 days and 8 hours, which is this point in time on the 13th of this month. The 13th of this month is on Tuesday of next week. So guys, you heard it here first. On Tuesday of next week, we would probably go up and retest this area right here at the $41,000 before we continue a consolidation, or maybe do another run up to those levels right here at 48,500. Thank you guys for watching this video. This is a purely technical analysis video. I'm telling you a little bit about the indicators that I use, so you'll be able to follow for future videos how do I use those indicators, and why did I say, and why will I say what I will say. Everything is based on those indicators and how I look at them, which is explained in this video right here. Thank you guys for watching once again. Make sure to subscribe, hit the like button. This would mean a lot for the Crypto Osho team, and we'll see you again at the next video. Goodbye, guys.